Are you tired of staring at your bank account, wishing your money would just do something? Do you dream of investing but feel overwhelmed by the jargon, the charts, and the sheer number of options out there? You're not alone. For many, the world of investing feels like a secret club with a high barrier to entry. But what if I told you that two of the most popular investing platforms are designed specifically to make that entry as smooth and simple as possible, even if you're starting with just a few dollars? Today, we're diving deep into the world of robo-advisors, pitting two giants against each other in a head-to-head battle, Acorns versus Wealthfront. We'll break down everything you need to know, from their unique features and fee structures to their investment philosophies and who they're truly best suited for. By the end of this video, you'll have a clear understanding of which platform might be the best fit to help you start building your financial future. So, let's set the stage. The rise of robo-advisors has revolutionized how people approach investing. Gone are the days when you needed a huge sum of money and a human financial advisor to get started. Robo-advisors leverage technology to automate investment management, offering diversified portfolios tailored to your risk tolerance and financial goals, often at a fraction of the cost of traditional advisors. They're perfect for those who want a hands-off approach to investing, freeing up time and mental energy for other pursuits. Now, among the crowded field of robo-advisors, Acorns and Wealthfront consistently emerge as top contenders. But they cater to slightly different needs and investor profiles, making the choice between them crucial. We're going to explore their core functionalities, their distinguishing characteristics, and ultimately, help you decide which one aligns better with your financial aspirations. Let's begin with Acorns, the pioneer of micro-investing. Acorns made a name for itself by popularizing the concept of roundups. Imagine this, you buy a coffee for $3.75. Acorns automatically rounds up that purchase to the nearest dollar, in this case, $4, and invests the 25 cents difference. It's a genius way to invest without even realizing you're doing it, essentially turning your everyday spending into a savings and investment habit. This spare change investing strategy is Acorns' signature feature and a major draw for absolute beginners or those who struggle with consistent saving. Beyond roundups, Acorns offers a suite of accounts designed to cover various financial goals. You have Acorns Invest, which is your standard taxable brokerage account. Then there's Acorns Later, specifically for retirement savings, offering traditional, Roth, and SEP IRAs. And for parents looking to get a head start on their children's financial future, Acorns Early provides UTMA/UGMA accounts. They also have Acorns Checking, a banking account that integrates seamlessly with their investing features, allowing for real-time roundups and automatic paycheck splits. Acorns' investment strategy is built on diversification through exchange-traded funds, or ETFs. They offer expert-built diversified portfolios, ranging from conservative, more bonds, to aggressive, more stocks, and they recommend a portfolio based on your age, time horizon, income, goals, and risk tolerance. You can also customize your portfolio to a certain extent, even including a Bitcoin-linked ETF for a small allocation. They also offer ESG, environmental, social, and governance portfolios if you want to invest in companies aligning with those values. Acorns also handles automatic rebalancing and dividend reinvesting, ensuring your portfolio stays aligned with your chosen risk profile without you lifting a finger. However, where Acorns truly sets itself apart is its pricing model. Instead of a percentage-based fee, Acorns charges a flat monthly fee across different tiers, Acorns Bronze for $3 per month, Acorns Silver for $6 per month, and Acorns Gold for $12 per month. While these fees might seem small individually, they can become a significant percentage of your portfolio, especially when your account balance is low. For example, if you only have $100 invested, a $3 monthly fee translates to a whopping 3% annual fee. This is a crucial point to consider, as high fees can eat into your returns over time. Acorns generally does not offer tax loss harvesting, a strategy that Wealthfront heavily emphasizes. Now, let's shift our focus to Wealthfront. Wealthfront targets a slightly more established investor, though it still remains incredibly accessible. While Acorns focuses on micro-investing, Wealthfront's automated investing account has a minimum deposit of $500. This higher barrier to entry immediately tells you it's geared towards those who have a bit more capital to start with. Wealthfront is renowned for its sophisticated automated investing features and its strong emphasis on tax efficiency. Their core offering is their automated investing account, which builds globally diversified portfolios using a wide range of low-cost ETFs across up to 12 asset classes. They also offer specialized portfolios, including socially responsible investing, SRI, options, and even a risk parity fund for those seeking higher risk-adjusted returns. One of Wealthfront's major selling points is its robust tax loss harvesting feature. This automated strategy monitors your taxable investment accounts daily for opportunities to sell investments at a loss to offset capital gains, potentially reducing your tax bill. For investors with larger taxable accounts, this can translate into significant savings. They also offer a feature called Smart Beta for portfolios over $500,000, which aims to generate higher returns by tilting portfolios towards factors like value, momentum, and low volatility. Beyond automated investing, Wealthfront offers a highly competitive cash account, which functions like a high-yield savings account and is FDIC insured up to a very high limit through partner banks. This makes it an excellent option for parking your emergency fund or short-term savings while earning a strong interest rate. They also provide financial planning tools, including a 529 college savings plan and a portfolio line of credit for larger accounts. In terms of fees, Wealthfront's pricing is straightforward, a 0.25% annual advisory fee based on your invested assets. This percentage-based fee structure becomes more advantageous as your portfolio grows. For instance, on a $10,000 portfolio, the annual fee would be $25. Compare that to Acorns' monthly fee, which could be $36 to $144 annually. As your balance increases, Wealthfront's percentage-based fee often becomes more cost-effective than Acorns' flat monthly fee. However, it's worth noting that Wealthfront doesn't purchase fractional shares of ETFs in its automated investing accounts, meaning a small portion of your deposit might remain uninvested. With that said, thanks for watching and until next time.